just to start the day off here. This is my main board that I show my people every day, where I list a bunch of stocks that I follow closely. The indices, the advanced declines, the up down volume. If you take a look up in the left-hand corner, you'll see that nearly 2,800 were up, only 242 down, about 11-to-1 ratio. That's huge of advances over declines. On NASDAQ, it was about 6-to-1, or 5 and 5.5 to 1. So let's call it 5.5 to 1, almost 6 to 1. Up down volume was a momentous 15 to 1, and on New York and on NASDAQ, it was I would say about 17 to 1. It was a huge day with many multiple point gainers. And like, just to show you something real quickly, when's the last time that you saw at least 60 stocks, 70 stocks, 80 stocks? I think it was 100 stocks today. More than 100 that I follow, we're up more than 25%. And we even had a stock that went up 1,000% today. IMAC Holdings. Yep, it went from 45 cents to over $5, and it's still running after hours. So that's the kind of stock that we look for when we're doing our day trades, but not obviously extremely speculative for a stock that went from 45 cents to $5 to even look at it now. But with day traders, we usually get in, we're out. One of the philosophies I have, and forgive me, I'm just getting over a laryngitis and a pretty bad head cold. But one of the things that I've always been a proponent of is doing 1 minute day trades. Meaning, when I say 1 minute, I'm talking about 1 minute bars. Each bar here represents 1 minute of trading on the chart. Now, you can look at a 5 minute, and you can see that the stock was going nowhere and just exploded today. You can look at a daily, and you can see the stock, which was traded up in here in the 7, 8, 9 range, got slam dunked with the rest of the market. And today, they've had some, I think, news about a test for coronavirus, and of course, everybody jumped on it and went crazy. But the key philosophy for me is, when I come in the morning, I'll take a look at the market for an hour. I'll go over all the current news, stocks that are gapping pre-market. I'll take a look at the charts. I'll see the patterns that are developing, and I'll create a focus list for you that you can focus in on. There's so many stocks. Today was a particularly tough day because so many stocks were gapping and running pre-market. It was difficult, but we did narrow it down to a dozen stocks or so that we follow very closely during the day. Some of them were swing trades. And we also do a lot of swing trading in my room too, for people who can't be there every day watching the screen, who have a job to do. And at this point in time, unless more of those people are online with me because of their ability to get online and not be interrupted, because they're right now not working temporarily until the coronavirus thing dissipates. But what I show them every day is my 5 minute and 60 minute charts. And you have 6 stocks in front of you, or the NASDAQ level 2 on those stocks, for stocks that basically are trading in a strong upward momentum intraday chart. And I wanted everyone to see what the bid and ask was in some of these stocks and how they were developing during the day, where the offers were, or where the bids were, and how I was reacting. The 5 minute chart shows you basically that the market gapped up, pulled back, and then stair-step its way up in a 5-wave move. 1, 2, 3, 4, 5, basically a wave. Then the 3-wave corrected, pulled back to support, and I told everybody that we're going to rally from here, or the market needed to, and it certainly started and did close strongly, going away with the Dow up 2112. 2112. S&P up nearly 210, and the NDX up 547, with those technicals, advanced declines, and up down volume being huge today. So when you come off a low, let's look at the hourly chart. Here's an hourly chart of the NASDAQ 100, which is what I follow closely. The NDX went from 9763 down to under 6,800. Amazing, 2,900 points. So the kind of percentage get lost was huge. But if you think that was bad, the S&P 500 and Dow was even worse. And today, when they rallied, the S&P 500 and Dow were up more than the NASDAQ 100, which is unusual. But what you see in front of you is a basic Elliott wave 1, 2, 3, 4, and this is a 1, 2, 3, 4, 5, meaning a fifth of a fifth. This is the bottom of the trend, in my opinion. And with the gap up through the moving averages today on the hourly charts, we closed right at resistance. If we get a follow through tomorrow, it could explode to 8,000. I would expect to be up another 500 points tomorrow. That would not shock me. I would look for that. If, of course, we get that, then we're going to test the 8,000 range, which there's a lot of resistance at. Showing you the same charts on the S&P, you'll see that we had that dramatic decline in a fairly orderly parallel channel. right there, that had a breakout today. Now, I was also telling my subscribers that this looked like a left shoulder to head, and that if we popped up and pulled back, even if we do pull back in here without the breakout, I'll be pleased with the potentiality of an inverse head and shoulders, which could then, measure-wise, would go up to about 2650, maybe even 2700. So I'm looking for a Fibonacci retracement of some sorts, maybe at least 0.375, maybe as high as 0.618. So we're in a mode now where I think the market has to prove itself tomorrow, obviously. But today was a huge, huge move for the market. A lot of individual stocks just had monster days. So, and now that you've seen my main screen that I show everybody, when I'm not on the air, this is the website page, by the way. The main page is thetechtrader.com, thetechtrader.com. And when you come into it, just click on try it free for 15 days. No credit card. We won't ask for anything. Just sign up and you get basically 15 days or about, I think is that 3 trading weeks? I believe it is. Right, it should be. Anyway, when you come in my room, you'll find that we have a very high energy room with a lot of bright traders and smart people that are constantly, all day posting on something that's breaking out, something where you can see me all day posting news related to the market, related to individual stock. And particularly because I'm a technical analyst, I'm always quoting or showing you where resistance are or what a stock may be doing at one point. Or if something explodes like that one there, I'll say BE explodes late to tag 584 up 195 or 48%. And during the day, and this is if you see DT, that means it's a day trade that I put out. We put out Pan American Silver this morning. It gapped up and pulled back, but we didn't get 24% out of it because that was from yesterday's close. But the bottom line is there was a lot of really good trades, very good trades today. Carvana was an incredible one. It was up 21 points near the end of the day. And there were quite a few other 20, 25, 30-point gainers today. If you like the larger cap stocks. Now, there are some, I'm not prejudiced. I like low price stocks. I trade high price stocks too. If the trend is there, if I'm looking for a pattern to develop, and I don't care what the price is, but I do prefer cheaper stocks because they give me more leverage. I can buy 5, 10, 20,000 shares of something and trade it out for $1 or $2 and make a lot of money. We really nailed a lot of stocks today in particular. Let me show you some of the stocks that really took off today. Well, IMAC, I already showed you. This stock exploded. And because I have a rule in my room, no stocks under $2 at any time. I can't talk about it. I can't post on it. Neither can you. I just find if a stock after 12 years of a bull market is still trading at $1 and a half or whatever, it's probably not something I want to. And on top of everything, by the way, usually those stocks are very illiquid too. This is a very thin stock, and you can see no stock goes up 1,000% a day unless it's pretty thin. It can be massaged upward. But when I see a stock like that pop in a 3-wave move and then consolidate, I always look for the breakout point, which really came right about there. See the volume that came into it? So we put out a swing on a day trade, at around 250. And within a short period of time, it was trading at 380. $1.30, it was about 50% pop in 40 minutes. Then it came down and coiled, broke out again. Another trade was possible there as the stock went from 350 to 540. So the kind of my philosophy has always been look for stocks that are gapping and running and have momentum. THMO was that. This morning it popped from 2.5 pre-market and then opened here and was halted and then exploded. We were lucky enough to get some people in early on around the 3.25 range. Excuse me. Within an hour, the stock was more than doubled, and then it coiled. One of my definitive day trades today was PLAY. Well, Dave & Buster's had been running up nicely. Look at the daily chart. Plunging from the mid-50s down to 4. Obviously oversold and deeply, deeply shorted. When I saw that, I wanted to trade it. This morning when it popped above, into the gap, above resistance for the 3 days. And that occurred there. Pre-market, it formed a little flag. When it broke out, when the market opened, we put a day trade on it. Went from 11:45 to 14:20 in less than half an hour. And then extended to 15:30, consolidated in a nice little midday coil right there. Came to the apex of that coil, an ascending bull coil right there. Note how quiet it got just before the explosion But look at that one bar that broke it out. One big bar. Another day trade was doable at 1490, and within a half hour it was 1730. A very nice play for my traders today. And at the end of the day, the stock closed up 569, 57%, 15 million shares, and that's a 1,100% more volume than average. You can see that's the biggest volume bar that I've seen on an up day since this company went public. So it's a huge day. And one of the things that people are asking me, what stocks do you like going forward? Well, any stock that comes down like that and explodes off the low and consolidates and then explodes again, I'm going to be looking for entry points. The ideal entry point on something like that is let it consolidate, excuse me, or back and fill for a couple of days here. I'd love to see it around 12 and a quarter or half on a pullback, but I don't think it gets there. I think it backs and fills on a higher level and rips to 22 at my next target. If you look at the overall drop to there, yeah, about a 0.618 Fibonacci retracement, be back up to 22. Another one is Chef's Warehouse, which got hammered from 40 to under 4, and I mean in 4 weeks. Pretty amazing. So it snapped back, had an inside day, and then broke out today. Again, heavily shorted stock. That's what you want to look for. I think this one gets squeezed all the way up to 15 at some point. Excuse me. A stock that we did very well with on the long side, but it broke out here. A utility energy power producer called Bloom Energy. It exploded, pulled back, and formed a little wedgie. And when it broke out, we put a swing on it. It went from 645 in about 6 weeks, reaching 14 and a half, and plunged with the market. But when I see that, I always look for stocks that were really, really strong that got imploded here. Usually have really dramatic snapbacks. At least that's my experience. Been doing this for a lot of years, folks. I'm 73. I've been doing this since I'm 13. You figure out the math. I wrote a book on trading called Profitable Swing Trade, Day and Swing Trading, using price volume surges and pattern recognition to find, to make profitable trades in the market. So pick up a copy because it's in layman's terms if you can find the copy. I understand it's hard to get. So here's the bottom line. Bloom Energy had what we call a V bottom with a right-hand extension. The resistance was 5. When it broke through 5 today, it was a day trade for us. Right there. It exploded from 5. It got up to 597, almost a point, and back and filled all day until late in the day it popped again. Net on the day, this was up 45% on 6 million shares. I put out a swing on some of the gaming stocks this morning. I made a swing, a day trade, excuse me. When I saw the ERI pop, and this is an old favorite of mine, we originally, believe it or not, picked this down here back in 2015 at 5. And within 3 years, the stock made it up to 70, or 4 years. It plunged like all get out, they say. 70 to 6. How about that for a hit? Now the reverse. Well, when I saw the pop here and the pullback right there, this was the platform that I call a stock. But my stock pops and pulls back and holds for 2 days. It's likely to gap and run or run up beyond that. So when I saw it gap today, we would put a day trade on it when it gapped right there. Immediately broke out above 1220 and spiked within minutes, 1482. Then the pullback and extension, and within 2 hours, it was 1567. 3.5 points right there. And then pulled back, and at the end of the day, and even after hours, it's running again. This is why I'm saying that these are the kind of stocks I think can get extensions. Yes, they're speculative. If you're looking for the more quality stocks, there's a lot of those too. But we had a big trade in Carvana today, as this stock got imploded from 115 to 22 in 4 weeks. What I really liked about it yesterday was it came down and then had a reversal bar. It closed very strongly near the gap and gapped up and broke out today. You can see this extending in near term to about 65. How about the swing back or the snapback in some of these hammered cruise ships? Royal Caribbean, which was 140, back in January, dropped down under 20. That's how bad things got. What's interesting to me is that in the last few days when the market was getting hammered, this is now up 5 days in a row, believe it or not, in this market. It just got so far, so stretched to the downside, it was bound to come back. So it's gone from about 19.75 to 40, 39.5. It doubled in a week. Look at the volume on it too, very heavy upside. So on any pullback consolidation, I think you're going to see this extend. And if we get any kind of market going forward, and that's still in doubt, my target would be about 55, and it's only 34 right now. That could be interesting. The other stocks in that group include, obviously, Carnival, which also spiked for 4 days in a row now, from 8 to 16, and then Norwegian Caribbean Lines, which spiked up for 4 days in a row, taking it from 7.25 to 15.75 today, more than doubling, filling that gap too. What might be next would be a test of that zone around 1920. Again, we may need some backing and filling in some of these, but it looks intriguing to me. The airlines, same thing. I put a swing on Delta when it got hammered down to about a 19 and change, and today it reached 28.98, almost 29, almost 10 points. It's going to have a problem getting through here, 29, and that's one of the reasons I told some people in the room today, think about selling it, and sure enough, 10 minutes later, S&P downgraded their debt. But if we do get some kind of major market move going forward, this should be 35 to 38. Any of those airlines are looking better in here. Alaska, SUV, LUV in particular. I like the way that popped out today with big volume. I would look for that one to make a move up towards 41. And then maybe at some point, 44 in that zone, that's my target for that. There's a lot of stocks that are going to snap back on quality, but I also want to show you some market standouts. Obviously, Teladoc and Zoom were the only two stocks yesterday, only two, to make new highs for the year, and with 700 new lows. I'm going to take out some lines here, make it clear for you. So what we've seen on this is a stock that went up for 6 days in a row before today. Now, what happened was there was a little bit of rotation because of strength stocks like Teladoc, which benefited from the current situation. It literally gone from about 100 to 175 in 5 days. So you're going to get some profit taking, and there was some heavy volume on the downside. So that, I think, eventually works its way into 190, 200. And Zoom, everyone says, is benefiting by people staying at home and doing online webinars. Also, even my kids are continuing their studies on Zoom. But 6 days in a row as well, with big volume yesterday, spiking up to the top of the channel. I warned everybody last night that it could be due for a pullback, and it sure got one. But I think it backs and fills and then works its way higher. I'm looking for both Zoom and Teladoc to make upwards of 190 to 200. I'm not kidding. When you get relative strength like that, the rule number one in stock trading is when a stock is showing excellent relative strength in a down market, it usually explodes in a bull market, in a bull phase anyway. So those are some examples of some really relatively strong stocks. There's a few that I really like. Here's one that I put a swing on, DXC. Now this stock rolled over hard from 36 and got down to 7 and change, 790. 4 days ago, it had an explosive day. It pulled back for 2 days and then ripped again today, big time, going from 1169 to 1568, about 4 points, up 38% in 1 day today. So these are the kind of moves coming off lows that you want to look for, because they tell me that that's the beginning of a move, not the end. You got the price volume thrust of the stock that's turning around. Quite a few stocks are doing that now. And a couple more examples. Some of the gaming stocks went crazy. Penn National Gaming, which got crushed from 40 to 3 and change. I'm not kidding. Isn't that amazing? Implosions. Throw the baby out with the bathwater. That's what happened. And then 4 days in a row, stocks up. Yesterday was a bullish inside day, and today was a gap away. So our breakaway gap. So let's do this. I'm looking for gaps and support. My target would be an estimate of about 17.5 to 19 zone at some point. I would look for a pullback consolidation. I'd like to see more of a right-handed extension and then another run up. One of the things we got today and over the last couple of days, and I want to show you this to convince me we're maybe at a low, was when the S&P 500 and the NASDAQ 100 both showed this pattern. Left shoulder, head, right shoulder, kind of an inverse head and shoulder, but today's breakaway gap took out the down channel. And that's what we have. And it closed at the high for the day going away. And the reason why I'm optimistic is simply that. When you see markets do that, close at the high for the day going away, it's a very good sign that the market is going to carry through the next day. So what might be in store is this. You might be seeing a new trend develop. It looks like this. That's why my target for tomorrow could be as high as 7,800, if not higher than that, not 8,000. Would not be shocked. On the S&P 500, this is what I'll be looking for tomorrow morning. To see if that, number one, if that trend line can hold. And number two, if they can extend this to look like this, which means 2550 to 2600. And that's about, with resistance up here, 2550, I think, is the target for starters. That's if we pop and break out again. I think we're going to gap tomorrow. I really do. You watch the futures tonight. I think you're going to see that. So when you come into detectrader.com, in the mornings, you'll see me going over 1 minute charts all day, looking for early patterns pre-market, stocks that may be popping and running, consolidating, whatever. Here's what we saw this morning on Penn, for example. The gap, and then this. And when I saw this rising angle of ascent this morning, I said to my people, looks like the gaming stocks are in play. I looked at Penn and ERI in particular. ERI was flagging here. Sorry. It looks like the whole group is set up for a pop and run. Indeed. This one broke out. We put a swing on it. We put a day trade on it. It worked out very well. Penn popped when it went through here. Right there is where I put a buy on it, right there. It then gave you a little pullback and then a pop. A lot of people sold it quickly and then it went down and exploded again. But what I'm looking for in the morning is that first initial thrust followed by the first consolidation. Take a look at the pop on Redfin and the early little ascending bull wedge or coil, whatever you want to call it. There, more of a wedge. But notice when it popped right there, to me it's a no-brainer. You want to buy it every time. That was about 1380. It went to 1573 literally in about 20 minutes. So if you can catch it right, you can be in and out with a nice trade and go play golf. whatever you guys are inclined to do. Now during the day, we'll see stocks that are going. I saw this pop midday. One of my traders said, take a look at IOBA. And I did. It exploded. It pulled back. It formed a perfect coil on a low volume ebb right there. And it broke out there, started to break out right there is where I give it a day trade on it. It popped from 29 to 33.5 and consolidated the rest of the day. And after hours, exploded to 40. You got to catch them when they first start because that initiates the thrust that initiates a new rising channel. Most of us got out here 1, 2, 3, 4, 5 on the fifth wave. I always do. So we're able to get out about 33 3/4. And it came down to 30.5 3/4, and then boom, after hours. It is what it is. We had beautiful moves today on the building stocks as housing reports were pretty good. Surprisingly good. Excuse me. So you can see the start at KBH today. It never looked back. It never really consolidated until here when it formed a little mini coil. Even then, even at these levels, I said buy it. That was at 14. By the end of the day, it was 15 3/4. Right there, $1.75. So if you're looking for a place where you get great ideas every day, where you have a lot of great people in, My philosophy has always been that if one of the spokes in a wheel is bent, then the wheel wobbles, which means to me, anyone in my group that is sarcastic, obnoxious, or negative, or bashing people will be asked to leave. I'll get one chance, and then you're gone. I want a clean room where everybody comes in, is serious about trading, is serious about making money, is serious about learning. That's the techtrader.com, and it has been for now 20 years. At this point, I'm going to call it good for this webinar, and I'm going to take a lot of questions. I want you guys to ask me questions on any stocks that you have in mind. If you were thinking about, maybe I should swing this or day trade it. Let's take a look at a couple dozen stocks and and get some ideas for you guys to trade going forward. Do we have any questions, Tom? Anybody?
Yeah, let's bring these questions. We're going to assume every question is a swing trade question. So if you do want Harry to take a look at the shorter term charts, please make sure to make that known. So just to start with just before we get into symbols, Harry, do you look at shorting stocks?
Of course. I have a list here called boxer shorts. You want to see some destruction? Fasten your seatbelts, ladies and gentlemen. These are stocks on my list that I've had on my list for a long time. American Airlines, as soon as it broke down here and formed that little bear flag, I said this is going lower, and I told everybody it can be shorted. 48 to 10. AAN. Head and shoulders top. When I saw that and broke down, I said this is short. 48 to 13. DRI, a restaurant chain. When it broke down there and formed a little several-day flag and couldn't rally, I said if it drops under 91, this is in trouble. 91 to 26. Dunkin' Donuts. Caved, formed a little wedge, rolled over from 71 to 38. DFS, Discover Financial. You see this little gap breakdown coil, a bear coil that developed right there? Well, when this thing broke that day, I said this is a short from 70 to 23. I didn't say it's going 23. No one knew this was coming, not this fast. Folks, I've been doing this for 60 years. I can tell you that I have never seen a decline that didn't have a rally more than one day. Take a look at any stock, and it basically had a one-day bounce, a one-day bounce, a one-day bounce, a one-day. It just kept going down. Look at the S&P. Same thing on the hourly. Here's your daily. One day, one day. Here's 2 days. Look. Oh, I'm sorry. There's the S&P. One day, and then down. One day, and then down. One day, one day, one day, one day. This is the opportunity for the market to not only break out, but have a 2-day run for the first time since the time it began and turn this market around. Now, this economy in this country has a lot of problems right now, and I don't think this market's going to take off like a banshee, but it wouldn't surprise me. Nothing surprises me in Wall Street. But I would be very vigilant, very careful, and in my room, and my request to you is you never trade ever, ever, ever without a stop loss. You never know when that stock, no matter how much you love it, is going to just fall apart. Bad news, trading halted, something like that. You've got to have a stop loss in. So anyway, yes, I do boxer shorts. So, I have, I could show you a list of hundreds of them, and just to give you a couple more. Hasbro, large bear flag rolled over. Boeing, of course. Everyone said to me, "Did you know Boeing was going down?" Well, take a look at this. A 2-year topping pattern. There's a double bottom there and a higher low there. But when it took that out and bounced to it and couldn't get through it and came down, it was as short as 265. And it went down at under 90. Crocs. Crushed. But it did break down, excuse me, and formed a little wedgie in there. See it? And when it broke down there, it just got slaughtered from 26 to 8. A line right, head and shoulder top, rising wedge, bear wedge, breaks down, snaps back, fails, and rolls over. EW, massive top formation and rollover. CPRT breaks down, rallies back, and gets hammered. Nuvasiv never looked back, but what a nice rally. Look at this move from 29 to 47. It just goes to show you that most of these were too far, too fast, stretched out too far. And that's why they're snapping back like a rubber band. Look at these charts. Look at that bear wedge or bear flag right there at 39. It went down to 8 and change. And I did it in 4 weeks. OLED, BPMC, I can go on and on. Look at this destruction. MAS from 50 to 25. So Yeah, I do boxer shorts. I have a whole list of them all the time. When they break hard. When they rally, they can rally hard. Look at Burlington go from 107 to 155 in 3 days. You got to be quick, and you got to be vigilant, you got to be smart, you got to trade with stops and listen to HB. That's me. When you're in my site, I give you support, resistance, and targets on every day trade alert. Take some more questions, Tom.
Yeah, Pfizer.
The question is, what do you do here?
Yeah, I'm thinking. I'm assuming the long side. If that's incorrect, correct me. I'm thinking we're looking for the long side here.
Well, this is a big zone for Pfizer historically. Let's take a look. You can see these lines in here, across here. This goes back 10 years, 15 years. So if Pfizer gets underneath that level, say under 27, 7.5, I would have to put a stop right there. Yeah, is it a buy here? Probably. It's oversold. It went from 41 to 27, and it did it in a 1, 2, 3, 4, 5 wave decline. That's basic Elliott wave. I'm not looking for a snapback. That snapback should get me to about there. I would say 33, 33.5 zone is going to be tough to get through initially. So if you're trading it and you're long, look for another 3, 4, 5 points, maybe 33, 33.5. Then I would look for pullback, and if it's going to base, it may retest or just give you a V bottom and right hand extended type pattern. Here's a V bottom and right hand extension. I'd look for something like that eventually. Pop, pull back, test, and go. Or it just takes right off. The next target on Pfizer would be 35.6 if it gets through that zone. So let's call it 33 and 36.
Looking for a long swing on Amarin.
AMRN?
Yes, sir.
Vasifa, huh? Well, I know it's got me very well. I traded it many, many years. It's a horrendous decline. Here's a 2-day chart. Let's go to a daily. See this drop off? There's so many biotech companies that did better than this. I don't know why, and I was surprised when I told everybody in it, stop under 18.5. That was right there. We got out that day in there, and a few days later it began its decline, all the way down to 8 and change. Now, this is a V bottom with a right hand extension. What I would look for now is for this to make a distinctive move above there. That would be above 1245 with volume. I'm interested. The secondary resistance is 1335, and my trading target is about close to 15, 14.75. You got to be careful though. It's a very choppy stock. I'm not seeing the volume or the technicals support this, so I wouldn't be excited about this. Can it go up? Of course it can. If the market does, it will.
The OIH.
What is it?
OIH, the oil services ETF. OIH.
Okay. Well, this is not my favorite oil. I like XLP, but it's not as strong. I'll grant you that. XLE today was a beautiful gap in volume, but I like the OIH. This is the best in this group right now. I think oil is going to recover. So my question is, if you own it and you're looking long, watch for the following. First, we got to get through 4.5. You do that with volume, you probably test the gap somewhere between 545 and 565 here. But with a big gap like that, that's usually resistance. And by the time it gets there, that moving average will be coming down, so you'll have double resistance there. So what I would do is, if I were you, I would trade the stock, stay long if you're long, and then look to get out about 5.5. Then look for a pullback consolidation and a light one. The key is when a new trend starts, you want it up on good volume and down on low volume. Don't let this come down on heavy volume. If you sold it and you see heavy volume, wait for a retest on low. Don't be buying it there. But at some point, that's going to be support. If it breaks through, it's support. If it fills the gap, usually my rule of thumb is halfway into the gap, not all the way. So my targets are 5.5, 3/4, and 6.5 in that area. If it blows through 460, 55, 60, 450, in that area. Through that, with volume, it may take off. I have a sneaking suspicion that you're going to see oil go back above 30, 32, something like that in the near term. If that happens, this could be back in that zone.
JetBlue.
Well, there's other better airlines, but today was an exceptional day. Now notice 37% on a mere 21 million shares. Pretty good volume, but it was some really heavy selling for 2 weeks, every day. Brutal. And there's a gap right there that just filled today. So let's see if there's a follow through. If there is a follow through, I would look for about 1090, 11 and a quarter in that zone right there. Then if it really powers through, which I don't think it's going to, but if it does, so my targets are 11 and a quarter, 12 and a half. If you see a quick follow through up in that zone, exit, because it's going to need to back and fill and consolidate. These airlines are not, repeat, not going straight up. They're not going to fly, literally.
Lulu.
Well, this has acted great, hasn't it? Up 4 days in a row, the last 3 in a lousy market, or at least 2 of the 3 days in a lousy market. When a stock of this quality goes from 266 to 125, 128, half in a month, you know the market's in dire straits. That's a beautiful reversal bar right there, followed by a breakaway move to the upside. Didn't leave an island, but close for me. I like the volume on the upside, but what does it reach now? Take a look. It filled the gap today. It hit the 21-day moving average. What I normally see when I get this is this. It may follow through. The near-term target is 2078. If you see that and you're long, that's where you go, I'm going to sell at least half my position and raise the stop to about 195. If it breaks through here, then you're looking for 224. If this goes from 128 to 224 without a break, I'd be surprised, but that would show incredible strength. So what I'm thinking is here, it's at resistance. It may back off tomorrow, but if it follows through, I would not be shocked to see 203 to 208, and I'd be a seller up there on a near-term basis because it's up 5 days in a row in this market. You want to nail down your profits if you can. Now, if you're a long-term investor, that's a different story. But if you're a shorter-term or medium-term trader, look for better entry ops down here in the 165.70 range, I think. May not get there, but I think it's going to back and fill. The worst case scenario, it should back and fill, consolidate, coil, whatever. But best case scenario, it does that. And the worst case scenario, it pulls back down to about 168 and retest the breakout line on a retest there. And if it holds, then you're on your way to 225.
Halliburton.
HAL?
Yes, sir.
Well, the oil services companies are caca. I mean, I cannot believe this thing went from 23 to 4 in a flash. All right, is that an all-time low? I think it is. Pretty close. Look at this. This is all the way back to the 2002 lows. That's about as thrashed as you can get. Today was a breakaway gap. I like that. Volume was good. The resistance is going to be right there, around 7.5, 735. Secondary resistance, if it makes it, if this powers through here, I'd be a seller at around 9.25.5 up in that area, waiting for a pullback to rebuy it around 6.75, 7. Don't get mesmerized by these markets. They're wild and crazy, and they're going to be difficult to trade if you're not smart. Before you enter every trade, you should know where you're going to sell it and where the stop is. That's my take on Halliburton.
Next one is ILMN.
Well, this is a biotech related stock. It was incredible here. I remember we traded it. This is absolutely where the stock had to be sold and shorted. Broke down, snapped back. 1, 2, 3, 4. I said to everybody, this stock could roll over. Not only did it roll over 285 to under 200. The bounce is beautiful. There's support right there. And in my mind, at the bottom of that bar too. That's my support zone right now. I would make it 230, 35. On the upside, there's a follow through, and you see it as early as tomorrow. Anything around 270, give or take a couple points, would be, I think, I would sell half. If it ran up to 280, 82, I would sell the rest of my position. No way this stock goes vertical and goes up there. It's going to back and fill it and retest and do things like that. It's a great start to a probably good intermediate move. Okay.
Casey, CASY.
The retailer. Well, Casey General Stores. And they really wrecked this, didn't they? The technical damage that was done in this market is unprecedented. Not so much the way it looked, it's how fast it happened. It's all computerized trading. That's what the bots did to this market. Okay, so this is a massive top, a breakdown. This snapback, I think, was on earnings or something, but it got crushed from 175 to 113 or something like that in 3 days. Today was an exceptional pop, 14 points. Where the resistance is has to be right there. So if you're in this stock now and you're looking for upside, the target is 153.4, no more than that. There. There's double resistance there too, but I'm questioning whether it's going to follow through much at all. We'll see. I mean, right now it's promising bottom. The best way to look at these, by the way, is on a 15-minute chart. Get an idea what it looks like. B bottom and right hand extension and a run to resistance. See what it did late in the day here? Not what that doesn't make me happy. It did. So I mean, I think it still goes higher, but it may retest the lows. This doesn't look as good as the ones we just saw. The stocks that we just went over look better than this one. Tommy?
NVIDIA, and this was asked by numerous people, so both swing and if you could take a look at the intraday.
Okay, well, first of all, I trade NVIDIA every day, and today NVIDIA was a recommended day trade. I saw it this morning, it had gone from about 212 to about 220 some odd. It was up 10. And then it ran up about 15.20. And then it formed this little pre-market bull coil. As soon as the market opened, it ripped. That's why I said we could day trade this. It literally went from the breakout point at 228 in about an hour and a half, 2 hours to 252. How about that for 24 points, just like that? Now, what does that mean? Well, the strength of this market, NVIDIA was up 36.5 on 27 million. A lot of lines in my charts, forgive me, I didn't realize I was going to go over this one. But NVIDIA certainly has broken through its declining tops line. It broke through its 21-day moving average. It broke through its lateral price resistance as well. So an exceptional day for NVIDIA with a breakaway gap on top of it. A V bottom with a right-hand extension as well. Look at it on an hourly chart. You see the inverse head and shoulders? Breakaway gap, moving averages crossover. When you get a moving average crossover and the stock consolidates above that without coming down and starts to move, this was a major breakout day for the stock. Where do I think it might go? Well, it looks to me like the current angle of ascent, if I'm drawing this correctly, yeah, is looking for a little bit more consolidation, although I think tomorrow it runs up. I think it has a shot right now based on the way it's acting. I'm making a run at 280, 85 range. Another 30, 35 points from here wouldn't shock me. And it would be a 1, 2, 3, and then if we get a 4, then wave 5. So it might consolidate for another, several hours and then rip. But it may just go right to the top of the channel, even through it, and then pull back. Either way, it's bullish, very bullish.
CODX.
Well, okay. Obviously, the daily chart looks pretty interesting. Now, 2 days ago, when it was sitting here at the apex of what looked like a wedge to me, I was intrigued. I said, if this pops that wedge, it's going to explode. Instead, it drifted lower. But there wasn't heavy volume on the pullback. The virus stocks fell out of favor like that. Even TDLC, I showed you earlier, pulled back and Zoom. So I'm not sure they're going to be in vogue right away. I think money's rotating into some of the beaten down stocks that look like no-brainers, and some of these are so overbought. But even this morning when Teledoc crashed down to 150, I said this is going to be an excellent day trade. And when it went up to 161, I said there's 12 points for you. But I didn't realize it was going to go to 172. Anyway, back to NVIDIA for a minute. I mean, code CODX. If it's going to make a move, and it does look like it might be trying to base out in here, the first order of business is to break that basing coil type pattern when the price volume starts above 8.5 with volume. You get it above 8.5, you're good for 9, 9.5, 9.75, and then you're gonna have to test the gap up here around 10. The other thing is it's in a really ugly looking declining channel. Until it breaks that channel, you can see 1, 2, 3, 4, 5 waves down in this. So is this a 5th wave bear coil, or is it a basing attempt after 5 waves down? It looks to me like the latter. If that's the case and the market runs, it's going to be important for this to get above 860, 65 with volume. Then you can go long. If you're looking for where to stop it, I would be really careful on the stock under $8. If it goes under 8, something's really wrong. It shouldn't do that. The next main support though is 5 3/4. So if it goes under 8, you may see 5 3/4 quicker than you want to. That's my take on CODX.
Disney.
Well, that's a nice little, here's another 15-minute look. Disney broke its down channel today, forming a V bottom with a right hand extension, almost a double bottom. It popped up and formed a little flag at the end of the day. This is bullish. Call it a wedge, actually. So for me, if this pops, my target on Disney is 112 and 122. It's as simple as that. Looks bullish. It might go. There's going to be a gap and resistance in here to deal with. But wait, let's get it up to above 103-ish. That's where I'm looking for 112 and 122. The immediate target is 102.5.
Domino's.
Is that PZZA?
I'm sorry, DPZ.
Oh, DPZ, right. Well, not too bad. The overall chart pattern shows that the stock really, both Domino's and Pizza Hut are doing great because everybody's indoors ordering food to go. And they're actually hiring people. But take a look. Resistance, resistance, come all the way down, resistance. So normally what happens with a stock that goes up to a triple top, it'll pull back and consolidate. If it does that gently, flags or something, it could blow through. Your targets on it right now are 360 and 380. Not a great chart. It looks okay.
Gold, the stock.
Yeah, Barrick. Well, I like Barrick a lot. This is one of my former swing trades. I think it's outstanding, long term especially. But man, they really crushed these gold stocks, didn't they? I don't get what happened here or why, but they sold everything. The comeback is exceptional. A huge reversal bar, followed by a right-handed extension retest, and then a run-up. Today was important because today it broke this. I think it's a massive big wedge. And it broke to the upside. It looks to me like this is going back to where it wants to be, and that is 20, 22, and higher. Long term, you can take this and really rule out some of these spike downs because they're exceptional. Let's just say this. I like this for a move up to about mid-20s to test this zone up here, 23-ish. On this move up, may get to 22, 23. We'll see. But again, every stock that's come up that quickly is due for a pullback. So I'm worried about the lack of follow through. If we don't get one in the market, then they're going to come back down, back and fill. It looks okay, but it's kind of, look at the volatility. You can look at a 15-minute chart and see what I'm talking about. Sharply down, sharply up, sharply down, and then a wedge forms. And then it breaks out. So the best way to look at this is probably on this basis. Resistance is there and there. That would be 20, 21 3/4, 23. And those are also your targets if it extends.
Sticking with gold, RGLD.
My favorite gold stock. Really, it's serious. Best, I think the best gold company in the world, my opinion. And I'll tell you why I say that. Before this crash here, how many gold stocks were making all-time highs? This was 138. I think this plunge got right down to a reasonable level. The snapback is going to probably have resistance. Excuse me, I dropped my mic. All right. I think resistance is going to be at the top of this bar. That would be 103.4. If it rallies up in that zone, it's going to have to pull back at some point. So I don't think this thing goes straight up. It might. Depends on how strong a rally we get. But there's resistance at 109 to 112, big resistance. Even if it doesn't, if it goes to 103 or 4, it might go another 6-7 points. But at that point, it's going to need to retest.
Apple X-Ray Edward, AXE.
I used to know this company very well many, many years ago. So this is what we got. We got a stock that broke a downtrend, ran up, pulled back to the 50, and look at this daily chart. This held up, exactly filled the gap, and held up reasonably well. If you look at 4 of the last 6 days, this was up. And 5 of the last 7. It's pretty amazing. The stock held up very well. But because of the way it's constructed and the lack of technicals, I'm not excited about it. What do I think it can do? Depending on the market, of course. It's going to be massive resistance up in the 93.4 zone. I don't think it gets there that quickly. If it does, exit because it's going to pull back down. That goes for a lot of stocks now. You're going to get a really strong 3, 4, 5 day rally. Then they're going to pull back. So, you know, you're going to look to sell them and then buy them back when they consolidate or retest.
Square, SQ.
Well, Square, I used to love, but I'll tell you what, I just so you guys know, I did a swing trade recommendation at 11.75. And it broke out right there. You know what, it went to over 100, right? And then spent a year doing nothing, year and a half, back and forth, and then it crushed. They got, look at these gaps, 1, 2, 3. This is called a breakaway gap, a running gap, and an exhaustion gap. But 2 days later, it made even a lower low. Spiked up, pulled back, there's your retest, and now breakaway gap again to the upside. But you got to be careful about on this one. There is a resistance level right there. If we don't get a follow through on this, it could pull back. If we do, then I'm looking for this. Fill the gap, test that gap. So my target would be 57.8 zone. That's a good 10, 11 points from here. But if it gets anywhere up in that zone, it's going to pull back. It's not going straight up. If it does, good for you. Just keep raising your stops if it gets in the mid 50s.
Microsoft.
Mr. Softy. Well, best looked at an hourly chart, I think. Let's see, Microsoft formed some sort of inverse head and shoulders here. It definitely is based. It has not broken its trend. So I need one good day tomorrow on Microsoft, and we're looking at 160.62. I'd probably be a seller there for a trade, 15 points. Watch it pull back into the mid 50s, 150s. And then I'm looking for 174 in that area. So I think if this is truly turned around and we haven't gotten evidence of that yet, then maybe this is the base. And maybe Microsoft's ready for a massive up move. Folks, I just don't think, I may be wrong, it's logical. If this market is done, meaning it may take a long time, days, weeks, months, whatever, this market is back and film based to repair some of the technical damage that was done. But coming off the lows like they are with the kind of thrust we're seeing, 25 to 50% gains in a day, that tells me that the market bottomed. Now, it won't be confirmed until we get a follow through in a big one. If we get a really good day tomorrow, it doesn't have to be 2,100 points. Give me 800, give me 500. I'll be happy with that. Anything else?
Got a couple more AMD.
I love AMD. AMD was one of my favorites all year and for 2 years here. We were long when it broke there, when it broke out there, and I told them to sell in the mid 550s. It ran up to 59.25. 1, 2, 3, down very quickly to 30, what was the low? 36.75. The hourly chart shows it best. Also, like in the case of Microsoft, only this one's broken out, an inverse head and shoulders. After a massive decline, it looks like 1, 2, 3, 4, 5. Breakout, breakaway gap, and run. So I told my people today I was looking for AMD to make a move to the 48.50 zone and then a pullback. So, if you're in it, you're looking for another 2 to 4 points up and then a pullback, retest, and then reacquire in the mid 40s for move to 53. Ideally, I think that's what might occur.
Let's try to get to a few more. PTON.
I don't like the company or the chart or the stock, but the bottom line is 1, 2, 3, 4, 5 ways down. Massive move off the low, and it's done quite well. I'm assuming long, right?
Yes.
And the other thing is always when you look at pullback lows, always stop under that low. If it goes under 21.75, sayonara. What I do like about this and I don't like about this, I do like the trend, which it's possible that this goes bonkers. This could run into the mid 30s. First, let's get it through here. Resistance is 25, and your target is 27.25 and 30. Those are my targets short term. If it gets through there with volume, it takes this out, then I'm looking for something in the mid 30s. Does it look good? Sure. Where would I stop it? Personally, me, under there. Under 23.25, 23, I'm out. If it goes and breaks out above 25.25, I'm in for a move to 27.25 and then 30. What was the other one?
Starbucks.
Okay, so Starbucks, 1, 2, 3, 4, 5 wave decline with a 1, 2, 3, 4, 5, fifth of the fifth. So this formed a V bottom with a right hand extension. And right now, Starbucks is there. Not as strong as some of the others, especially if you look at it daily. But today was a good day. So you want to know why NASDAQ was up, what, almost 600 points? Now, Starbucks appears to have taken out its declining tops line. And your target unequivocally is 70. If it gets through 70, you can see a lot more. But I think it may have a problem at 70. The targets are 70 and 75. Go for it. 70, 75.
Last one I think that we'll have time for tonight. Let's go with Apple.
So Apple left an island reversal. I love island reversals. Are you guys aware of that? I bet you a lot of people didn't even know that. An island reversal is when they gap down one day and gap up the next day and leave an island unto itself. Meaning that there is as bullish a pattern as you can get for a reversal. When they come at tops, they're dangerous. When they come at bottoms, and especially with Apple, not only gapping up, closing at the upper end of the range. Now, the only negative for me, the volume was the lowest volume Apple's traded on an up day in about a couple weeks. So not the thrust I want to see. And if you draw this line accurately, it really hasn't broken out yet. I would look for Apple to get up to about 253, 55 tomorrow. And maybe have some problems there. We'll see. If it backs and fills, this is support. You do not want Apple to go below today's low. Under 234 might be a reason to exit, okay? But if it breaks above 260, I would look for 272 and 285. And that's it, folks. I appreciate you being here. And I invite you to come to thetechtrader.com.